Hey everyone, Mike from the Real Estate Marathon here. I wanted to take a second and detail a really important and really powerful investment strategy. It's one that we've talked about a few times on the show, but I really just thought it deserved a deeper dive to really truly understand how important it is, how impactful it can be, really kind of see how it works in a real scenario. So we're going to dive deep into the BRRRR strategy over the next few minutes, and that's the buy, the rehab, the rent, refinance, and repeat strategy. And it's one, when used correctly, can really fast track your journey to financial independence through real estate investing. So let's dive in. All right, so like we said, this is the buy, rehab, rent, refinance, and repeat. So let's take it in and put some numbers into a hypothetical deal. So let's say you found a deal for $100K. Maybe it's in a fantastic neighborhood, but it's just a little bit run down. It's not moving ready. It needs a little bit of work, and you see a little bit of upside in this deal. You're typically not buying these BRRRR properties turnkey. You're not buying these things at retail prices. You're looking for a little bit of a discount for these because you need a little bit of wiggle room between what you're buying it for and what it can be worth after you put the rehab into it, which we'll go into in a minute. So let's say this is a fantastic neighborhood, it's a good school district, and you think after you put a little bit of work into this property, it can be worth anywhere between $140,000 and $150,000. Maybe you got it direct to seller, you're doing some direct marketing. However you got it, you got this deal at $100,000. You're gonna buy that with a loan. So you're gonna put $20,000 down, 20% down on it, and get a loan for $80,000. Let's say from a rehab perspective, you've done your due diligence and you found that you can get this thing up to market value with about $15,000 of work. Maybe that's, countertops, some kitchen work, some paint, some carpet, or some vinyl plank flooring, whatever have you. Let's say you got 15 grand into this thing and you can get it back up to an after repair value or an ARV of around 145. So obviously when you're putting, a ton of work into this, putting $15,000 into this and you're rehabbing this property, you're gonna be able to rent it for a little bit more than you could if you hadn't done that work. So let's say you get $900 a month for rent on this property. We're not going to do a full analysis on the cash flow on this, but let's say it's cash flowing good at $900 a month of rent. Then comes into the refinance part, and we'll dive a little bit deep into the numbers in a second here and why this matters. But let's say your after repair value of this property is $145,000. So you bought it for $100,000, you put 15 grand into it, and after everything's done, after the rehab's done, you think that you could sell it or it would appraise for $145,000. The last step of this, of course, is the repeat aspect, but let's go into that in a second. So for those who are keeping track, your all-in cost with your down payment and your rehab is $35,000. And when you go to refinance it, you can do a cash out of $36,000 because you can refinance that $145,000 property. Most banks will give you an 80% refinance or 80% loan to value on a refi. And if that property is worth $145,000, that means you can get a loan for $116,000. Now, if those of you quick on the calculators or quick with math in your head, that's $36,000 is the difference between that $116,000 loan that the bank is going to get you on the after repaired value versus your $80,000 loan that you had when you originally bought the property. So all said and done, you're looking at $36,000 that you got cashed out of the refi when you're done, and you only put $35,000 into it. So you're walking away with $1,000 extra in your pocket, and you've got that steady income stream of $900 a month, obviously minus your expenses. So you can see here why this is such a powerful and impactful strategy when you're starting out. Because you can take that $35,000 chunk of capital and you can apply that to obviously the deal that we just did. Then you can roll it into the second deal after you get your refi. You can roll it into the third deal and you can keep on refining those properties, taking that initial capital out and rolling it into the next one. That is why this is such an important and really impactful strategy when you're looking to scale quickly with limited capital. All right, guys, that was the quick hit on the BRRRR strategy, which is, again, that buy, rehab, rent, refinance, repeat. And really, hopefully, that gave you a little bit of idea of how important, how impactful this could be when you're starting out. If you guys liked what you saw, make sure you hit that subscribe button and go check us out at therealestatemarathonpodcast.com. You can also check out the Real Estate Marathon Podcast anywhere you can download or stream podcasts. So thanks, guys.
Thanks for listening to the Real Estate Marathon Podcast. If you found value in any of the content from this show, consider supporting us in the following ways. Subscribe to the Real Estate Marathon Podcast. Leave a rating and review. Continue the conversation with like-minded individuals on social media by heading over to the Real Estate Marathon Podcast Facebook group, or follow us on Instagram and Twitter at Real Estate Marathon Podcast.